Hello. Today we will analyze Indraprastha Medical Corporation Limited. So, without further delay, let's start with it. Indian pharmaceutical sector supplies over 50% of the global demand for various vaccines, 40% of the generic demand for the US and 25% of all medicines for the UK. According to the Indian Economic Survey 2021, the domestic market is expected to grow 3 times in the next decade. India's domestic pharmaceutical market is at $42 billion in 2021 and likely to reach $65 billion by 2024 and further expand to reach $120 to $130 billion by 2030. Now, coming to the fundamental analysis for the stock, first we have the price to earnings ratio is used by the investors to determine whether the stock is overvalued or undervalued. For the peers category, we have the companies mentioned on the screen. From the chart, we can see Indra Medco is good value based on its price to earnings ratio 9.5 times compared to the peers, indicating that the stock is undervalued at the present moment and has a good potential to rise in future. For the past earning growth analysis, Indra Medco earnings have grown by 12.1% per year over the past 5 years. Company's earnings growth over the past year 2417% exceeds its 5-year average 12.1% per year. In addition, earnings growth of the company over the past year 2417% exceeded the healthcare industry 60.5%. Coming to dividend yield and market, we have Indra Medco dividend at 4.10% is higher than the bottom 25% of dividend payers in the Indian market at 0.4%. Company's dividend 4.10% is in the top 25% of dividend payers in the Indian market 1.70%. Coming to price volatility segment, we have Indra Medco at 4.5% is less volatile than average movement of healthcare industry at 5.4%. Further, company weekly volatility 4.5% has been stable over the past year and won't be wrong to consider it in the list of least volatile stock in the market. Next, we shall look at the technical analysis for Indraprastha Medical Corporation Limited. For 4-hourly chart, we can see the trend has been going in upwards direction from the 15th of July onwards, and after the minor retracement, from the 29th of July, you can see the trend line continues right to the y-axis, indicating that the stock prices are in bullish zone. Continuing the focus on the bullish region, we shall use resistance and support levels to identify the price points on a chart where the probabilities favor a pause or reversal of a prevailing trend. We can see the breakout from the first resistance at the level of 57.45. On the same day, the candle has made a big bullish candle and breaking out of its resistance point, while taking the support at 55.5. After 25th, it showed a minor retracement, and from 1st to the 2nd of August, it showed near 3-soldier pattern reversal. However, there is a need to be caution as the third candlestick is visibly smaller than the preceding 2 candles, meaning that the buyers are not completely in control. Further, this statement can be tested by the fact that third candlestick made a bullish hammer, which shows that although there were selling pressures during that day, ultimately a strong buying pressure drove the price back up. Further, we can see bullish engulfing pattern indicating reversal from decreasing to increasing in the future with high accuracy, and the candle has broken the next resistance. On the 28th of July, we expected the stock to go for a target price of 68 rupees at a buy price of 59 rupees with stop loss at 51 for 6-month time period. While the risk to reward position would be 1.13, indicating we will make 1.13 times more money if the trade goes our way, and if we achieved our target, it would be 15.25% gain from the base position. You can contact us from the details mentioned on the screen via missed call, WhatsApp or email. Thank you for being patient and listening the video to the end. Please do like, share, and subscribe the channel to know the latest updates in the market. That's all for today. See you tomorrow.